Has 2014's hideous bear market in agriculture finally run its course? You know, I've been wondering about that ever since Agco, the world's third largest maker and distributor of agricultural equipment like tractors and combines, shot the lights out when reported on Tuesday after a string of pretty tough quarters. Now, last year, Agco's stock got taken to the woodshed as declining crop prices did a real number on their business. But after this latest quarter, which sent the stock soaring 9.5% in one session, it's looking like the house of pain is a thing of the past. Perhaps the future holds a house of pleasure. Consider, Agco earned $1.18 per share when Wall Street was only looking for 65 cents. Geez, that's a 52-cent gigantic beat. And even though the company's revenues fell by 13% year over year, they nevertheless came in higher than expected. Management reaffirmed its full-year guidance for 2015. Even though agricultural commodity prices are still weak, Agco is restructuring its business and cutting costs in order to take greater control of its destiny. Plus, they announced a fantastic 9% dividend boost. And even though that only brings the stock's yield up to roughly 1%, this kind of dividend hike is a powerful sign of confidence from management. Throw in the fact that back in December, Agco announced a new $500 million buyback. That's equal to more than 11% of the company's market cap. It's clear these guys really believe their stock is way too cheap. So let's take a closer look with Martin Richenhagen. He's the chairman, president, and CEO of Agco. Find out more about his quarter and his company's prospects. Mr. Richenhagen, welcome back to Mad Money.
Jim, thank you very much for having me again.
Of course. Now, Martin, I've got to tell you, many of the companies that have been reporting who's looking at the world, say the oil companies, and seeing it as negative, they're walking away from their buybacks. They're suspending. They're cutting them back. You actually lay out a kind of a negative scenario, and you're accelerating your buyback, and you're giving a bigger dividend. What do you see that is happening that justifies that?
Well, actually, as you already mentioned, I think we are cheap, and that's the reason why a buyback is a good strategy. So I think it's basically paying or returning money to our shareholders.
But you're cheap only in the terms of your conference call, the long term, the number of people being born, the need to feed people. The short term, in your presentation, most of your numbers are minus signs in your different regions.
Yes, that's it. We have quite some headwind globally. You can imagine Ukraine, Russia not doing very well. We have negative side effects from sanctions in some of the European markets like Poland, the Netherlands, Germany, and so on. We have problems in, as you can imagine, Greece, Spain, Italy. So not related specifically to our business, but nothing we can influence so much. The euro is another problem. Brazil not doing so well. Argentina. So actually the only country which seems to be more stable right now are the US, but also here farmers are conservative regarding their investments.
Well, I could argue, as a contrary, that you're buying back stock aggressively because this has got to be one of the more darkest before dawn moments in any cycle.
Yes, I think, let's say, when you think about the long-term logics and the fundamentals, food production still is extremely important, and therefore I think we will come back soon.
All right, one of the things I thought was you've always run a lean ship, sir, and yet you still found more costs to take out? Is this it? Are there really more costs to take out? You've really kind of wrenched everything out of this company.
Well, actually, we try to be better and we try to be more productive and efficient more or less every day. That's the culture of our company. And then we, of course, also invested in some of our sites, like in the Fendt German tractor factory, where the productivity improvements actually helped us to go down from 2-shift, almost 3-shift operation in some areas to just a 1-shift operation with the same capacity. And so that means I think we have still great ideas how to improve or to reduce our costs also in the future.
Martin, given the nature, the sensitive nature of the agriculture business to every single country that you're involved in, sometimes the farmers are very powerful, are there regions, particularly in Europe, where you think that there could be some green shoots, that things could be getting better, but we Americans are just not seeing it yet?
Yeah, I think the UK, Scandinavia, some parts of the eastern countries like the Baltic states. And then, of course, we invest quite some money, or did invest quite some money, mainly in engineering and manpower in Africa, and we see that growing. So last year, we had basically 3 areas of growth. One was our GSI business, which is grain storage and handling. The second one was our African business, mainly Massey Ferguson tractors and smaller combines. And the third one was parts. Our parts business is doing well because, different from construction, even when farmers are careful with investments, they still use their equipment because they still farm and they need parts, and the older the products get, the more parts they need.
Well, the one thing I thought that would help was that I figured someone would go by the wayside. But in your conference, in the analyst meeting, you basically say, no, the only players left are well capitalized. I mean, you can't be the last man standing. The rest of the guys are well capitalized. How do you win in that situation?
Well, actually, I think you need to focus on engineering. You need to come in with very intelligent solutions, and you somewhat have to create demand. This is very important, and I think that is where we have huge opportunities in South America, where the volatile and Massey Ferguson product will come in with higher horsepower products, which is, I think, a way how to create demand. And then, of course, in some of the markets, we go for market share.
Well, Martin, I got to tell you, very few people believe in their stock and their company as you have tremendous conviction. Let's put it that way. And I think that you know your business better than I do. I want to thank you for coming to the show, Martin Richenhagen. He's the Agco's chairman and CEO. Great to see you, sir.
Thank you so much.
Well, what can I say? A guy who buys back that much stock and gives you a dividend boost when it sounds like things aren't so hot. Who knows how good the situation could be when things get better. Stick with Cramer.